All right, we're back for another episode of This Week in Crowdfunding. I'm Brendan, he's Connor, and today we got a pretty good docket of stories for you. So we'll jump right into it. So, Connor, I sent this one over to you, and I've been seeing a ton of Twitter buzz from CEO Jeremy Frommer of Created Inc. They're a publicly traded company under the ticker VOCL. Their subsidiary company, Vocal Inc., announced the successful launch of a $1.235 million Reg CF community round. Why I've been seeing a lot of the Twitter buzz, I've read a tweet here or there, but the company itself hadn't been doing very well. So let me explain it, I guess, a little bit better. Created is the parent company, and Vocal is a subsidiary. The Reg CF raise is coming from Vocal, so they are going out and raising crowdfunding funds. And then Created is the parent company, and that's where CEO Jeremy Frommer comes in. Successful raise, it seems. As I said, the
1.25.
Vocal 125. I mean, not bad. The parent company's stock is now down to 18 cents. It hasn't done very well, and from what I can see, it looks like they were raising because they wanted other forms of capital to be introduced into Vocal, and they wanted the support of their customers. So, what do you think about this?
So, my biggest takeaway, and this is a common theme throughout crowdfunding platforms, crowdfunding rounds, is that the creators, the customers become investors in the company. And I think that's kind of the best form of advocacy is when the customer wants to become an investor in the company. And this happened with Vocal. They had 2 million creators now empowered to invest, and a lot of their creators did invest. They raised $1.25 million through the crowdfunding round. So again, this just highlights to me that equity crowdfunding platforms are only going to become more and more common, bigger and bigger. More people are going to want to invest because people love having the freedom of being able to invest in the company they buy from. That's my biggest takeaway. What about you, Brendan?
Mine comes from, I did a little extra research and I found a Yahoo Finance article that had a letter from Frommer to the shareholders, basically talking about the stock's performance and talking about why they went through with the campaign. And when he, talked about the Reg CF campaign, divesting just 10% could provide Vocal with $6 to $10 million of capital, reducing dilution pressures on Created Inc. and enabling Vocal self-financing. I think it was an effort to help the parent company. And I see from the platform, it's a creator-driven platform. I think Reg CF was a really good way for them to go. I'd love to have Jeremy on if he wanted to talk about it. I know he's been very vocal about Reg CF on Twitter. I'm happy for them that they raised, and I hope the company starts moving in the direction that they want to.
That is interesting that companies have now started to turn to crowdfunding platforms, raising rounds through crowdfunding as a form of financing instead of having to do loans, bonds, whatever you name it. They're not going to banks or other institutions, right? Now they're going to go to the customers or the individuals. And that shows you the power in numbers and the power in people and the power in a community in general.
Yeah, and I think this one's especially interesting because Created is a publicly traded holding company, right? So they have
Right.
different subsidiaries whose their performance is obviously based on theirs. They can go out with those subsidiaries and raise those funds because those subsidiaries aren't public. Um,
Right.
I'd be interested to see if other publicly traded holding companies go this route if they start to their performance starts to drag. Um, I think it's
That
incredibly interesting the way they did it.
yeah.
But yeah, I agree.
Yeah. And hopefully we'll try and have Jeremy on. It'd be awesome just talking to him, hearing his perspective and why he decided to go this route, the benefits he saw going this route. So hopefully we'll have him on within the next couple of months and we get to learn more about that.
Yeah. Now moving on, Boxable, very interesting company, kind of one of the more well-known Reg CF companies. They make, from what I understand, basically different parts of houses that can be stacked on top of each other to make different types of buildings. Is that the way you understand it?
Yeah, I understand it. So you know how there's cookie cutter houses, where
Yeah.
houses that have the same structure, there's maybe 10 different kind of shapes, but overall you'll go through a neighborhood and there's all these cookie cutter houses where it's pretty much the same house over and over and over again, little different styles.
Right.
I imagine it kind of like that, but even more cookie cutter, so it really helps speed up the process of building houses. You can have your house more or less, seems like you can have it within a week just because they have everything structured out.
Uh-huh. And was that the one that Elon Musk went with when he was building
Yep.
that house down at the SpaceX launch site? I think it was.
Yeah. Isn't that cool, right?
That's
Boxable
cool.
built Elon Musk's tiny house, so and
Yeah.
they raised what, over $3 million in less than 9 hours?
Yeah. So from our Crowdfund Insider, probably one of my favorite crowdfunding news sites, Dealmaker, which is what they were using to raise, reported that they raised 3 million in less than 9 hours.
That's crazy.
We were trying, yeah, that's crazy. We were looking up before. We were trying to figure out their valuation. We came to somewhere around 2.5 billion, which is, an incredibly high valuation. Well, I guess I don't know the financials. It could be a very fair valuation. Um, but basically, Dealmaker said this is one of the fastest on record in Reg CF. So that's incredible. I mean, with a company with a concept like that, they have a ton of patents pending. This is their, I don't want to say serial crowdfunders, but they've raised on crowdfunding multiple times before. It's nice to see, companies continue to go back this way. And what I would be interested in is how many repeat investors they had. Do they have people adding on to their positions? So what do you think?
Well, I think the repeat investors is a very interesting thought to think about because if people become repeat investors, one, they believe in the company, but two, they're not just investors. They feel like they have some sort of deeper connection if they want to continue to invest, continue to support the company, continue to help be a part of the company. And then I also think from the other end, it's really interesting seeing these companies keep going back to crowdfunding platforms to raise capital. That shows that there's a lot of benefits from raising on crowdfunding platforms, whether it's just getting the brand out there, getting brand awareness, increasing brand awareness, or it's just how fast they can raise capital. Like Boxable raised, $3 million in less than 9 hours. I mean, that's
Yeah.
really, really impressive. So,
Yeah, and it said a quarter. And I'm reading from the Crowdfund Insider article. This I think is a great line. According to the offering page, Boxable was selling shares of the company at 80 cents each, with a $1,000 minimum. Not super uncommon. Boxable continues to lose money, similar to most early stage private ventures. You may read the company's financials here. I'll put the link in the description if anybody wants to access that. But then this. Boxable has created a modular housing project that could be constructed in a very brief time. The initial casita is said to have a reserve list of 170,000 homes, representing $10 billion in revenue. So it seems like an oxymoron almost. Continues to lose money, 10 billion in revenue. What do
yeah,
you think
well,
about that?
so I wonder if the reserve list is kind of the waiting list, right? So there's people on the
Yeah.
waiting list, they haven't paid for it. But once they pay for it, I wonder if Boxable is raising capital just to help get the production started, right? So they
Yeah.
have a ton of demand, they just don't have enough supply yet. And so they're raising money to help, get enough supply so that they can fulfill the demand. And once they start completing those, 170,000 wait list, right? Then they'll get the $10 billion in rev. So it's going to be really interesting to watch Boxable. If Elon Musk bought a house from Boxable, clearly they're doing something right, right? He has all the options in the
Right.
world. So,
I mean, yeah, I mean, I don't doubt that their product is good. How do you think the real estate market might affect them? The real estate market isn't super good right now, especially more commercial than residential from what I can see. But do you think there's a projected decline in the market? I'm not saying this is actually going to happen, but do you think that could affect them in any way?
so I know there's one problem with the real estate market is that it's like a 8 month delay, I'm pretty sure, between when people pay to when the house starts getting built. Now with Boxable, if the house can get built within a week, obviously it's a
Uh-huh.
smaller house, but there's no reason for someone to wait 8 months anymore for building to then start. If they know that that house can be built in a week and they know that it can be
Right.
built fast, the company has all the products. So I think I think it might hurt some of the major real estate
Builders?
companies. I think it'll
It's like,
hurt the builders. And I think I see
right.
Boxable, like China had a company that could build a hotel in 48 hours. It
Wow,
was it
that's
was a
incredible. I didn't know
14-story hotel because it was the same thing like Boxable where they had all the pieces, they knew how the pieces would go, and then they had robots
that.
just assemble it within 48 hours, 14 stories, right? That was a news article this past month in China. So if Boxable is kind of heading in that direction, and we've already talked to multiple founders and we've seen humanoid robots kind of the future, the next 10 years, that's
Yeah,
going to be the biggest market ever. Boxable
yeah.
might be heading that route, and I think that impacts the builders more than anyone else.
Yeah, I never really thought about that. Little sneak peek for episode 21 coming out next Monday, um, with the prosthetic hands, and we got
Yep.
into humanoid robots a little bit as well. Um, and another person who's like, my demand is just so high, we can't meet the production. But I guess that's a good problem to have for most businesses. I think a lot of people would rather have too much demand than too little.
Yeah.
Uh, but that's should be something that's really interesting to follow. The other way my mind goes is, I think a lot of people when they buy a house, aesthetics are a huge part of
Hmm.
what they want in a house. I'm not super familiar with the aesthetics of a Boxable house, but I'd be interested to see, if they can meet the aesthetic demands and what people want their house to look like. I mean, it kind of seems like a no-brainer for people to go with Boxable, especially if they're going for a new build.
So what if Boxable kind of becomes, instead of a house individual zone, more like companies, instead of getting hotels in different cities for their employees to travel, they create a little community of Boxable houses where their employees can stay at, instead of having to constantly rent hotel rooms for travel. And then they stay in those Boxable houses, they have more room, and then they take a 45-minute commute into the city to do their meetings, 45-minute commute out, kind of relax before they take a flight home. I think that's an interesting development. And that might be a market that
Yeah,
Boxable ends up tapping into, where it's more of the business aspect instead of the leisure everyday home for people, for regular people.
I'll take it a step further. What about if you were in, like, you went to KPMG's, what do
Lake
they
House,
call it?
the
Yeah,
Lake
Lake
House.
House.
Yep.
Companies pay tons of money to send their companies to conventions, and they rent out huge convention centers. I mean, what if they just bought a big plot of land? They could put a couple Boxable places together for a big conference center, and then have individual pods out there for all their employees. I mean, you think about it, with the efficiency that Boxable would have. I mean, it's kind of an interesting thing to think about. There's so many different possibilities.
Yeah, it's my mind went to, what if Bonnaroo starts having Boxables, just build little houses outside, and then people
Yeah,
stay in the
yeah.
houses instead.
Yeah, like think about, like, like Lollapalooza, or what's
Right.
stuff like that. Like they just, the ones where people camp out. You could pay a premium just to have your own Boxable out there.
Yeah.
It's an
Get the
interesting market,
AC,
and
the shower, right?
yeah, yeah. I mean, that sounds like a pretty good deal to me. So, yeah, we'll put the link down there for anybody that wants to check it out. I think they just closed their Reg CF. Obviously, they hit their goal, but I did see on their site they opened up a waiting list for their Reg A. So we'll put the link down there for anybody that wants to check it out. Before we get to our non-crowdfunding topic of the week, which is we're going to talk about a little bit more about IPOs, continue our conversation from last week. Wanted to give a shout out to a company I invested in using Reg CF, CADI, CADI. The CADI kiosk is basically a kiosk that goes in. They put them at golf courses and driving ranges and stuff like that. And you can basically take a club out, use it during your round of golf, and try it before you buy it. Uh, Pretty revolutionary kind of idea, and has a lot more applications, more than just golf. You can kind of turn anywhere into a retail space, which is really cool. They've done a really good job. The guys over there, Matt and Tyler, have done a really good job. But I wanted to give them a shout out because they just signed a strategic partnership with the city of Seattle, unlocking that whole Pacific Northwest corridor of golf courses, and it should be it's a really, really big deal for the company. So I wanted to give them a shout out. They've been doing a great job. and I'm looking forward to see you know them continue to succeed.
So, Brendan, let me ask you a quick question before we get into the IPOs.
Yeah,
What makes you so excited about caddy? Because you're an avid golfer. You love golfing. So,
yeah.
from being an investor's perspective and being an avid golfer, what do you love about what caddy is doing that makes you want to invest in the company and believe in the company?
So I think there's two sides of it. So the golfer side in me says um, to try a golf club now, right? If you don't belong to like a country club, which a majority of golfers do not, they play on public golf courses. You need to go to a Golf Galaxy or a Dick's Sporting Goods or another retail place to try it out. Go out of your way to do it, and um, sometimes people just buy off the rack, which um, is not every club is fit for every player, right? Just think about
Right.
baseball. Not every player uses the same baseball bat,
Yep,
right?
that
So
makes
you're kind
sense.
of throwing darts at the wall with that. So the idea that I'm already golfing and I can stand there and say, all right, I can try this club out for this round and see how it works is really exciting because you can get immediate feedback. And I know they have partnerships with TaylorMade and Callaway. I feel like club manufacturers should be super excited about this because they're basically getting the clubs in the hands of their customers. So that's number one. As a golfer, that excites me because I know how much people would enjoy that accessibility. On the other side of it, their technology is really advanced and their whole fulfillment system and supply chain is really efficient. And I think it has applications far beyond just golf with the kiosk system they have in place and the patents they've been granted. So I think this is a first step and a great step towards them being at many golf courses around the nation. I don't really see anything else like this right now. It's a
Yep.
very difficult idea to execute, but I really do believe that this could be, especially for public golfers, like which is a majority of people that golf. If I could go to a public golf course and try out the new TaylorMade Stealth 2, without
Yeah.
having to drive to Dick's Sporting Goods, you know, make an appointment for a fitting or that. I can
Right.
just click a couple buttons, swipe my card, and if I'm pretty sure, I'm 90% sure. I don't remember. I don't want to be wrong, but I'm pretty sure if you like it, you can buy it on the spot. I'm not 100% sure about that. Or
That's
you can
friction,
order
right?
it from CADI, yeah, from CADI, and they'll ship it to you. I'm not 100% sure about that, so I don't want to be wrong. But yeah, I'm really excited about this. It's cool, and it's cool to invest in something you believe in.
Yeah. And it reminds me, I associate what Caddy's doing with how retail stores created the fitting room, right? They created fitting room
Yep.
for clothes, and those closed stores, once they installed a fitting room in their store, their sales went up 3x because people got to see how they looked and really loved how they
Right.
looked with the new clothes compared to how they looked with the old clothes. So they said they buy it. It also creates the upsell. Oh, you got the shirt. Now you should get the pants because the pants go perfect with the shirt. Here's the pants. Why don't you buy the pants too? So you can do that with the golf clubs. Oh, you have the driver. Why don't you also try the 7 iron? Why don't you try the 4 iron? Why don't you try the 9 iron? Right? So I
Right.
see this as it is a great idea. You get to try it live in a round, right? Not just
Right.
on the driving range. So you actually get to see how it works.
Yeah, and sports equipment in general, I think, is kind of like that. You talked about reducing friction. E-commerce in general, one of the biggest things, and a lot of people buy everything online now, right?
Yep.
Is that you buy something and you have to return it, right?
Right.
So
Right.
you're basically saying with this, you can try it before you would ever have to buy it and return it. It's the same thing from episode 2 with Anthony Kwok and Zilio, right? They created the virtual fitting room. They're trying to reduce
Right.
friction, reduce the returns market in e-commerce, and I think Caddy is almost inadvertently doing that. I don't remember that being a part of things they sent out. Again, I could be totally wrong, but when you're reducing friction for people, you're helping retailers, and
Yes.
this is creating a whole new angle for sports equipment in retail.
Yep. You're helping the stores, right? The stores for the clubs that have the caddies there.
Manufacturers,
Then you're helping the manufacturers, and also with golf clubs aren't cheap, right? So people want to
Oh,
make sure the golf clubs actually fit them, help them with their game, not someone else's game, and make them get the best score possible. So it makes sense being able to try these clubs before you buy them. And if you don't like them, well, you gotta walk through the clubhouse on the way out. So returning it's a piece of cake.
piece of cake. You just put it back in there and it's done. Um, so I'm super excited. Want to give a shout out to Matt and Tyler. They've done a really good job. Would actually love to have them on the podcast if they ever wanted to jump on. Um,
Let's have
so
them on.
uh, yeah, go caddy, and hope they continue to work. And I, hopefully at some point when I'm playing around, I'll see the kiosk out there. So moving on, Connor sent me an article. Connor sent us wanted to talk a little bit more about the IPO market, which I agree. It's really interesting. We had a good conversation about it last week. So Connor, why don't you tell everybody what you came up with?
So following IPOs is very interesting because usually IPOs are a leading indicator of economic growth, right? When companies
Mm-hmm.
start to IPO, it's a leading indicator of economic growth. And lately, we've been seeing a lot of companies filing for IPOs or starting to IPO. Klaviyo, Instacart. So looking at
Arm.
this chart that will pull up on the screen, you see in Q2 2021, IPO activity for venture capital was at a high, and it was at 54. All right, so 54 companies in Q2 21 IPO, and then it starts going down. So it goes 50, 54, 40, 32 to 7 in Q1 2022, and it's been
Wow.
2, 2, 3, 4, 4 from Q2 of 22 to Q2 of 23. And now it's going to start to rise. But I was talking to Brendan about this. I said, you know, I don't know if these companies are IPOing necessarily because they think it's a good time to IPO or if it's out of necessity. If it's out of necessity because the company needs to raise money and IPO and the IPO market is kind of starting to warm up a little bit and they see this is the best way to get the most amount of money possible, or if it's out of necessity that these venture capital firms need more liquidity to pay back their LPs. So this reminded me of ARM. Jason Calacanis, he said that ARM went public not because necessarily it was the right time, but because SoftBank needed liquidity to pay back their LPs for their vision fund because they've lost so much money in the vision fund. So seeing this
Mm-hmm.
chart that we're going to show on the screen, it reminded me something very similar to that as it might start becoming a good time, but rates are continuing to rise. The market's kind of in a weird place right now where no one really knows exactly what's going to happen over the next 5, 10 years. So it's I think people just want to start IPOing and getting back to the norm. And then venture capital firms are hurting a lot more than we know. I think if we were inside
Mm-hmm.
one, we would see how bad they're hurting. And a lot of the losses that they have had, they're not realized. So they're unrealized losses. And it's not going to show up until the next, 3 or 4 years. But inside the firms, they're starting to calculate, well, these unrealized losses are really adding up. And we need to get some sort of money, some sort of liquidity to pay back their investors.
Yeah, I think you kind of hit the nail on the head there. And I think, what they're saying to themselves is something like, all right, a lot of our valuations are probably out of whack because of the ZERP environment and, the fact that, leading up to 2021, anyone could raise money.
Yep.
So when it comes down to it for me, you think about companies that have done really well post IPO, a company like Square, right? Who's realized like 90% of the market value or something post IPO, something like that.
Yep.
I could have that number totally wrong, but it's a lot.
Google's 98.
And yeah, 98 or something like that. So I think they're sitting there saying, and I think especially Instacart, as we talked about last week, is probably the best example. Like our late stage investors are going to get slammed, right? But there's
Right.
no sense in waiting another year or two where our company is struggling to raise capital or not really moving anywhere to wait an IPO. Because a year from now, 2 years from now, our valuation not only could be the same, but it could be lower. So they're
Right.
just saying, all right, let's just go IPO. Let's go out into the public markets, bring our company into that next stage, and then recapture. And I'm sure a lot of those series, especially at Instacart, Series F, Series I, Series D, whatever, a lot of those people are probably on the board, and they're
Yep.
like, I need to get this capital back, and I need to move on because this is going to be a losing position now, and it's going to be a losing position in 5 years.
Yep. Let me cut my
So
losses, right?
let me cut my losses. Let me play the IPO game, distribute shares to my investors. You know, I don't know what individually venture capital firms are going to do with those shares, but I would assume they probably give those shares to their investors and say, you do what you want to them, and that's them taking their conscience and saying, I'm going to do what's best for my LPs. So
Yes.
I mean, I can't blame them.
Nope, you can't. And it'll be interesting to see how it plays out. The best part is we won't truly know how it plays out until 10 years from now. So all this is
Exactly.
just us taking notes, us following the data, kind of tracking what's going on, seeing what's happening on Twitter, because I feel like Twitter is a great place to kind of to get insight, to listen to how people talk, what people talk about, and the trends that come up. And you know, a point you brought up is a lot of really good companies realize 90% of the value after their IPO. So
Yeah.
that indicates if it's a really good company, on average, the really, really good companies, the number one in the market, number one in their industry, they end up realizing 95% of their market share post IPO. So if it's a
Yeah.
really good company, it doesn't matter
It'll
that
continue
much
to
when it's
grow.
going to IPO because it's going to realize so much more value afterwards.
Right. And I think it'll be interesting to see. We kind of had the first wave of post SERP IPOs, right, with ARM,
Right.
Flavia, Instacart. What's the next wave? Is it Stripe? Is it SpaceX? Um, I'll be really interested to see what ends up happening, especially with Stripe, because Stripe was kind of the belle of the ball in Silicon Valley for a long time,
Yep.
and they're kind of probably the most notable company to not go public yet.
Yep.
I'd be interested to see what their current valuation is, and if they decided to go public, what their valuation would be then. Because it's a
Well,
great company and they have a great system and a great product.
the interesting thing about that is Chamath was talking about that on Twitter, and he said with because Adyen had their I think Q2 earnings report maybe a month ago. They released their
Hmm.
earnings report and their share dropped 40% after they released their earnings report because people started realizing, and Adyen is a competitor of Stripe. They started realizing that those types of companies they do well at first, but they quickly become commoditized, right? The big
Hmm.
companies figure out how to leverage them to get the best price. So they leverage those two companies against one another. So those two companies either have to realize, are we going to keep cutting the percentage fees that we take with every transaction so that we can beat our competitor? But by doing that, we're significantly decreasing the amount of revenue we make, the amount of profits we earn, just because this account is so massive? Or are we going to start targeting the little guys, increasing the percentage of transaction fees on the little guys? But the little guys can't afford, they can't. The difference between 3 and 4 for the little guys is significantly more than for a Google, for a Meta, for
Hmm.
I don't like any other big Tesla, right? So
Amazon. Yeah.
Amazon, seeing Chamath talk about that was very interesting. And then I was listening to My First Million podcast earlier today, and one of the guests on it was saying that he could listen to the founder of Stripe, the CEO of Stripe, and he said that just by hearing him talk and reading between the lines, he thinks that founder is just going through it right now with Stripe. And I thought, wow,
Yeah.
that is interesting for him to say.
Yeah. I'm sure. I mean, I'm sure it's a difficult time for them. You just reminded me of another Square story. I was listening to Roll Bota's new podcast, Crucible Moments with
Yeah, how was
Sequoia.
that?
It's really good. It kind of goes through. It's like a 45-minute episode into like the big decisions at a couple companies. I think they have an Airbnb episode, a PayPal episode, and they had a Square Block is I guess the name of it now episode where basically they had a moment where uh, they were like, if we're gonna take part of the market share in this payment processing system market, and this was, I mean, 10 years ago now,
Yeah,
we're gonna have to give away our hardware for free. And it's difficult decisions like that that were the reason that they got into so many different places.
right.
But they did take a huge fiscal hit, and I wonder if companies like that are starting to have to make decisions, at this point. Late stage, bell of the ball, super good companies that kind of got caught into a valuation cycle that really, really wasn't beneficial to them at all, seeing what has happened in the last couple of years. do they have to make tough decisions like that? And I'm sure those are the conversations that are going inside Stripe. Obviously, Stripe is very different than Square, not hardware, software wise, but maybe
Yeah,
this is, as Roloff would say, a crucible moment.
the interesting thing about that is a lot of these companies have probably lost at least 50%, 60% of their valuation since 21, if not more. And by really cutting into their earnings, if not going negative, in order to grow their market share, it's going to tank their valuation even more. And no one right now wants to invest in a company that isn't profitable, doesn't have steady cash flow.
Right,
So
right.
that's one of those, it's a crucible moment, right? They really have to think what's going to be better for the company in the long run. And once again, the best part is it's going to play out over the course of the next 10 years. And we get to watch and kind of take notes, see what happens, make our predictions.
Yeah,
And it's exciting. I think that's exciting, right? We get to see
yeah. I
who's
mean,
super smart.
IPOs are always exciting, right? It's just like a new
Yes.
funding round. It's a new life for a company. And as we know with markets, the markets will tell you what the value is most of the time. So
Yep.
I'll be interested to see what happens when they end up doing it. Um, so I guess that concludes our This Week in Crowdfunding episode. You got anything else?
I think that's it. We're going to let's try and get caddy founders on and then
Yeah,
Boxable founders on.
I'd
And
love to get and Jeremy on from Vocal. I'd love to get him on too.
yep. So
So yeah, I guess that does it for us this week. Episode 21 will be out on Monday with Dr. Akhtar of Psionic, which was again like our last few interviews have been awesome. Like the people
yep.
we've been having on have
Very
been
inspiring too.
fantastic, inspiring too. If you liked the Dr. Harry Clore episode 16, you are going to love Dr. Akhtar. Super inspirational dude, and looking forward to putting that one out and seeing everyone
And
react to that. So,
and don't forget, he did the little demo with the bionic hand in the middle of the interview,
oh
which is the
yeah,
coolest part. So you have to watch that on YouTube.
yeah, coolest part of the Next Big Thing podcast by far, coolest moment so far was the bionic hand. Blew my mind. I mean, I'm not an engineer. No, neither are you, Connor, but blew my mind. Like, we're not engineers. Like, literally, like the farthest thing. But like, super, super nice man, and looking forward to releasing that episode on Monday. So that'll be it for this week in crowdfunding. Make sure to follow us: YouTube, Substack, Twitter, any platform you
LinkedIn,
can think of. We're on
Instagram.
there. Instagram, and check the links down below for a little bit deeper dive into the topics we talked about today. So for all you listeners, thanks for listening, and we'll see you next time. So
Bye
long.
bye.